Hey guys, Boris Schlossberg from BK Forest. Great to be with you. Another unbelievably volatile week in the markets. It seems to be Murphy's rule of life that whenever Kathy and I leave the desk, the markets just get incredibly volatile. So unfortunately, I missed the first three trading days of the week, but I did have more than enough fun on the last two trading days. I'm going to show you a couple of very interesting setups as we go forward. But as always, first, please note the following video is for educational purposes only. No claim is made as to the accuracy or efficacy of any trading strategies contained in this video. And as always, do your own research. So I showed this particular trade on my Twitter feed earlier yesterday, but I want to just discuss it in much more detail because I think it's going to give you a very, very good insight into exactly when you should and when you should not enter into flow trade positions. Here's dollar yen. This is obviously at the not post, but sort of during the massive intervention wave that we have from BOJ the night before. And we have a little bit of a pullback, a little bit of profit taking that goes on. The profit taking goes through the 79.50 level, right? That's the critical thing. What I wanted to kind of focus your attention on are the two major levels, the 50 and the 00 levels, and what the price reaction and what the candle structure is around those levels that gives us either high probability or absolutely idiotic ideas, because I'm going to show you both. So here's the yen trade, which makes me look very smart. Basically what happens, we have price correction all the way through the 50s, then we wick out. We have a very nice long wick on the candle, which means we've had lots of bargain hunters come in, and I join the move at the 50, and of course it's basically 15 minutes to the profit, boom, 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 the trade is done, right? That's the smart way of trading it. There's two things that I was doing here that were absolutely crucial. Let me just pull back on a 50-minute chart so you can see. Sorry, let me come back to where it was. Okay, the first thing that I was doing is I'm trading with the overall trend, the big flow, right? The second thing I'm doing is I'm buying once I get a signal, both candle-wise and price-wise, off my flow levels, that the counter trend is over. That's the smart way of trading. Now let me show you the stupid way of trading the same idea. So here's Euro Swiss, excuse me, dollar Swiss, and not only am I getting hammered to the upside because this comes out after NFPs and I'm sort of long risk, and this seems to make a lot of sense that that I should be long risk, and originally I get long here around the sort of the first turn to the upside. And the trade seems to appear to work for about 10-15 minutes. I'm trying to target the 77 level. But then, of course, we get the news that Ren comes out on CNBC Europe and basically says they're not going to expand the TARP. It becomes very negative to the euro. Everybody sells off the euro. I'm sort of unaware of this news. A very critical mistake I make, just being unaware of why I have a downdraft. I keep thinking, oh, this is just profit taking, and I keep buying down, getting stopped out. But here is the mortal sin that I commit for the day, which is that after I sort of absorb the news, I'm like, oh, this is really negative. I want to get short risk, right? But here's the mortal sin that I commit for the day. I get short at the figure around 7,600, a little bit below 7,600. But look what happens on the wick up. That is, the candle action is not confirming my directional impulse. It's actually showing me that this is a washout at the 00 level. And the smart trade, if you're going to do counter trending, is actually to get long. The only thing that saves my ass in this particular trade is that I have a 50 stop, the Swissy rallies, and then comes back down, and I basically cover for a much small loss just because I'm lucky. I trade the same idea. Let me show you the same idea in Euro Swiss, which is what I'm trading the supposedly downdraft in the Euro Swiss, right? But here again, very stupid, off a very big wick around the 108, 107, 80 level. Basically, around the round number level, I'm not getting confirmation on the candles that there's more downside momentum. And the smart thing to do is just probably stand back, or if you want to gamble on the counter trend move, would have been to buy this counter trend move off the 1080 and make 25 points on the move up. Again, I'm unbelievably lucky. I have a 50 stop on this thing, and basically there's one last final flush of risk, and I'm able to cover for a small profit and get out of this trade alive. But very, very stupid trades. The reason why they were stupid trades is because, yes, the directional movement was to the downside, but the candle was signaling to you that this could have been a possible exhaustion move. And unless and until you get full downward draft on the move, it probably wasn't a great idea to be short this thing. So to reaffirm the move, the right way to trade this is with the broad flow when you have a minor counter trend correction, and you can come in and simply buy the broad flow. Otherwise, you're basically bottom ticking the move, right? This is my, let me show you, where's my yen. Otherwise, this was the right move. Otherwise, I was just basically bottom ticking the move. Lastly, I just want to leave you with the following thing of why flow is so important. So after all of this stuff happens and I'm able to absorb the information properly, right? Here's what happens. We get the big burst in the euro. And at first, I thought it was S&B intervention. Then we thought that, that maybe, there was some kind of a possible news on the euro. And we found out that basically this was positive flow because the Europeans said they may buy Italian bonds. But one of the key things that I wanted to show you was that my first impulse was to buy any kind of a retrace. Whenever you have a massive move to the upside or a massive move to the downside, it is generally very important to trade the price action. So I took the first move because I saw the price action. Once I absorbed the news flow, I realized it was quite positive, and I then joined for a second move up over here. So I turned myself around. I made myself a better trader by first going counter flow correctly in the euro, then pro flow, counter risk in the euro, then pro risk in the euro, and was able to overall make myself money despite making mistakes in interpreting candle action earlier in the day. Otherwise, unbelievable week. Let's hope we have more of this flow next week. As always, at FX Flow on Twitter, I'll be there every single day next week, and I hope to see you guys then. It's Boris Schlossberg for BK Forex Advisors, over and out.